Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Having managed to stabilise above 65 cents, the Australian dollar extends its move following a break of 65.45, and from there could see further gains on towards the region of 65.70.75 and maybe even on to where the 60-day moving average is, which is seen roughly around 66.40.50. I do like the way this pattern has shaped up, with the divergence kicking in first and now breaking through the midway point. Along with that, with the MACD also strengthening, should give further confidence to the bullish case and therefore see a gain on towards, as I say, anywhere as high as around that 66.5 and reassess from there. Although the euro dollar lacked direction on Wednesday, the US dollar has edged higher from 102.90 to 103.10 as traders await further clues or economic data that might influence market direction. With limited positive catalysts expected until more economic data is released later in the month, some of the markets might struggle to gain momentum. Investors will likely closely monitor economic data that's due to be released on Thursday, with the US weekly jobless claims, which could give further insight on monetary policy extended from the US central bank officials next week, ahead of Fed Chairman Powell's speech at the Jackson Hole Symposium event later on this month. Presently, I feel we could see a challenge to that topside area, which was recently claimed at 110 figure 10. A breaker beyond there could give further scope on towards 110.65 to 111. Broadly speaking, I'm not bearish, and any pullback could give opportunity towards the level of 108.70.80 and therefore should increase demand if challenged, and as I say, looking on to 110. Having got the squeeze in dollar yen, the market is retreating from the highs above 147.5 and now potentially could see a move back to the downside. As we can see here, the technical outlook from the RSI midway point has rejected, and therefore maybe even seeing a break of 145.90 could see the slide further. And still to continue to monitor your risk management, as the market is likely to get volatile again and therefore could see a drop back towards that key area, which is somewhere around 142. Given the heavy extent of the market, this could be just a consolidated pattern that sees the next leg down, which could bring us towards the region somewhere around 130 as a bigger call. Sterling, well, the market's showing divergence that could increase to the upside, and therefore look for a break above the level of 127.50.60 that may lead on towards the region of 128.60. And the base, if visited, should be seen around 126.30.70 area. A good return in demand for gold as it looks now towards that key level that was recently broken at 2,400. If we see a break above there, that could lead on towards 2,418 and even higher. As I mentioned earlier, this sell-off has respected the broad uptrend around 2,358 to 62, and while intact and seeing a break above 2,400 could reinstate the upside to 2,500 as a broader call, with the immediate target around 2,418 to 22 as mentioned, and 2,436 to 41. Wrapping up with all the divergence kicked in from the MACD and the RSI, and a good candle that supports a bullish call on to 75, 70.90 or even extending on to $78 a barrel. I am quite bullish in this pattern, given the fact how it's shaped and unfolded, that could give further gains, and any pullback likely to be shallow around 73.45 and a base seen around $72 a barrel. Well, that's a wrap. Thank you for joining me. As always, look out for the interest report and I hope you enjoy the great start to the day.